Today is July 15th, and the Bank of Canada has once again held the key interest rates at 2.25%. This market is the sixth consecutive rate hold, and it comes at a moment when the central bank sees early signs of economic improvement, but also acknowledges major global uncertainty. The Bank of Canada announced the policy rate remains at 2.25, exactly as economists expected. Every major survey, including Reuters polls, and 36 economists predicted a hold, and that's exactly what we got. This rate has been unchanged since October 2025, when the bank made its last move, a 2.25 base point cut. The Bank of Canada economy is showing signs of improvement. Growth is picking up after a weak start to the year. Consumer spending remains solid. Exports or growth has resumed. Housing activity, while still soft, appears to be stable. Inflation is still elevated, hitting 3.2% in May, driven mostly by gasoline prices, but the core inflation remains to 2%, meaning the broad price pressure are not spreading. The bank expects inflation to ease, gradually falling to around 2.5% in late 2026 and return to 2% target by early 2027. The bank highlighted several global risks. Middle East conflict continues to push prices up and create volatility. U.S. trade policy remains uncertain and could affect Canada's exports. AI investment boom in the U.S. is supporting global economic activity. Oil prices have eased from their peak, but the bank warns that if they stay elevated, inflation could spill over into the other goods and services. Mortgages and loans, the rate hold means variable rate mortgages holders see no change in payment. New borrowers continue to face moderated borrowing costs. Business gets stability for planning and investment. The bank believes the inflation will continue to cool, but warns that global events could change the trajectory quickly. The Canadian dollar has been under pressure due to differences between U.S. and Canadian bond yields. The bank message today is cautiously optimistic. Growth returns, inflation is easing, risk remains high. The bank is ready to adjust policy if needed. This is a shift from earlier warnings about possible rate hikes. That language has now been dropped. Canada has entered a period of slow but steady recovery, and the rate holds at 2.25%. Reflects confidence and inflation is cooling and the economy is stable, but also recognizes that global risk could change things fast. If you're a homeowner, a renter, a business owner, an investor, this rate hold gives you a bit of breathing room. But if an eye on global oil prices and U.S. trade development. Like, follow, and subscribe. We'll be back with more.